Hey traders, this is Blake Morrow with Traders Summit, and with me today I have Bill Baruch from Blue Line Futures. I always love talking to you, Bill.
Yeah, thanks for having me on. I really enjoy visiting with you.
Yeah, I enjoy visiting with you because A, first of all, you're so knowledgeable in the commodity markets in general, but B, your calls in crude, especially the last two interviews that we've done, you were really bullish on crude. I would be amiss if I didn't ask you about how you felt about it today, but I wanted to say great calls in crude over the last several months. How do you feel about crude oil today? Looks like it's getting comfortable below $80. So what are your thoughts?
Well, thanks for acknowledging that. It's but right now it's about what's the next trade really, and we've been putting a lot of research out about. Well, let's start with the technicals. Technically, 84.60 to $85 was a big level. We had this as what we characterize as rare major four-star resistance. We never closed above there, and there was a gasp for air was about a week ago, a week and a half ago, and it failed there again. So that level was a really big resistance. Even before that last gasp for air, we were saying the upside is fairly limited. When you get everybody coming in there, every bank was calling for 80, then 90, then $100 Brent, and then you saw the oil demand forecasts for next year. Everybody was moving up to 100 million barrels per day. So technically, though, we felt that if everybody who wants to buy had already bought. So from the supply demand technical area, and you started to see some managed money start to pick up, although it wasn't at previous peaks. And ultimately, too, more fundamentally, you started to see the delta rise, which I think was something I remember going back to June of last year, and that rise in delta, or not last year, sorry, June of this year. And when delta started to rise, I was maybe doubting it, and then it sort of had this delayed reaction on some of the more cyclical markets. And I think that's something here that's weighing on it. You have Germany cases picking up to China. You had Morgan Stanley, I think it was, lower China growth. U.S. dollars moving higher. And, and with all of that, you have the White House threatening to release SPR. So you get these reactions too. With today, EIA data was over what should have been bullish, but because of bigger draws, it's threatening to release the SPR or larger amounts of it. And I think with these crosswinds, it's a reason for people to take a step back. Some people who've been long for a while, like say us, with our recommendations and some of the positioning on as a financial advisor, I was very overweight in energy space and have tailored those back a bit. So I'm looking right now as, I don't know if it get there, but 76 to 76 and a half is now a rare major four-star support. I think that would be a terrific buy. I do think we'll still get up to $100 next year. It's just, this is a very much needed pullback.
Good. Okay. Well, that's good to hear. And you said, well, what's the next trade? Well, I think gold bulls have rejoiced on the fact that we finally broke that 1830, 1835, depending on if you're looking at spot or the front month contract, but gold has broken out and it's actually been maintaining its gains. So how do you feel about gold where it's currently at?
Yeah. I'm sort of this eternal gold bull, and I cut my teeth first trading basically 20 years ago, started trading gold futures. And yeah. I love gold. I mean, it's been something that has treated me very well over the years. And I this year more than ever, I've traded it on both sides. And I think that, it's giving you these ranges that it sort of gets exhausted very quick, and then it comes back in. But we finally have broken this downtrend line going back to August of last year's peak, a record high. And this move that came on the heels, it started the Fed ultra dovish. They basically was a net zero taper. The amount that treasuries they tapered were essentially the U.S. Treasury is going to issue less. So on top of that, they feel this underlying fear with the Fed that they're terrified of an October 2018 autopilot type moment. They are overly dovish. I think that was the game on for gold and silver. I was actually somewhat, thought path least resistance lower and was flat into the Fed meeting, but it really quickly flipped my mindset in how dovish they were to get long. And that level, which is, it was about 1800 area was the 200-day moving average. It chewed through fairly quickly. And then that level 1830, actually after a hot CPI number. So it goes to show you here that gold has some real momentum behind it because it's rising with the dollar right now. I do think that it's gotten a little out ahead of itself. And from a trading perspective, I'm sort of looking for a little swing lower, but long-term wise, I mean, we're, as bullish as we've been. and about a year. So I think right now you don't want to chase it. My narrative for years has been you don't want to be buying gold when everybody's screaming for it. That's when you want to be capitalizing on gold that you already own. So really, if we pull back, the real buy opportunity would be a test into 1835, 1845 again. We got close to that yesterday. 1851 was the low, and I'm surprised we didn't push low overnight, closing on the low, but the dollar started peeling back too. So I would really want to keep a close eye on what the dollar's doing from a currency perspective and how that's affecting the gold, as well as what the Treasury market's doing, because you got this really tight pennant that's building in the 30-year bond yield. And it's the 30 years moved up, has some good resistance at 210 now. It has some really tremendous support by 190 is a big closing area, and that's going to continue to consolidate. And when we get a break in a direction in the 30-year, I think every market's going to take notice.
Well, you're talking about, you were talking about just a little bit earlier, what's the next trade? And I know when we speak, we always talk about crude, we always talk about gold. But is there anything else out there in the markets? I know you like to focus a lot on different commodities. Is there anything else that really captures your attention right now in the marketplace?
Yeah, I think everything. I mean, in the sense that this is, I believe, really, we're at the onset of a secular bull market in commodities. I've said that multiple times. Some people come back to me and say, hey, it's not secular. Your definition of secular is not mine. I mean, secular means many, 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 many years. Well, my answer when crude oil was back in the 40s and 50s, and I was calling it, we're at the onset of a secular bull market. My answer was, what do you mean wait until crude oil is at 100 before calling it a secular bull market? No, I'm calling it now. So, I mean, I think look at across the board and look at these commodities this year, from agriculture to things in the metals to things in the energies. Everything is moving higher. People are not watching sugar and coffee and cotton. Coffee is breaking out this week, ripping higher. Options expiration was last Friday. So you get these moves that can come on options expiration or when things expire, because it sort of removes some pressure that could be containing a market. So coffee was ripping higher. Sugar today is breaking a downtrend line. Cotton had a big move. We're getting bullish on cattle. I mean, my partner Oliver Slope does a tremendous amount in cattle, but there's some really great seasonality that's coming in here. So even if you're just a macro trader, not somebody that's hedging your farm, but from a macro basis, you're getting some really great seasonals and cattle that's started at the onset of December. I mean, there's really some great things. And then even looking farther out, there's some really intricate type plays on a fundamental basis. Look at the rising of costs. Everybody's talking about inflation. Well, the input costs for agriculture is really could damage some of the production next year. And we think that one of the best ways to capitalize on that is December 2022 corn, because you could see less acres being put in for corn in order to save costs. So again, there is a lot that's taking place, and it's all behind this inflationary narrative. And now the dollar has risen recently, and I think there's a lot of resistance at 96.5 to 97. So I think the dollar is in basically the late innings of this rally. And when it starts to sell off, whether it's next week or a month from now, you're going to see commodities just roar higher.
Well, that's interesting, and if you, I didn't talk to you about this, and I wasn't really thinking about it until you mentioned it. We're up for a new Fed chairman or chair. I shouldn't even say chairman. We're up for a new Fed chair. And a lot of people speculate that it could be Powell or Brainerd. And Brainerd is a dove, and she's known to be more of a dove. I mean, if she is a Fed chair and she becomes the Fed chair and becomes confirmed as Fed chair, that dovishness might actually spill over more into the commodity market, really feed that secular bull that you're talking about. Do you have any opinions about the upcoming Fed chair nominations? Any opinions there?
Yeah, I do. I think we are seeing the Federal Reserve more politically infused than ever before. And now, obviously, I didn't live for 3 years, 20, 30 years ago and really know the markets. I'm 37. So, I mean, going back 30, 40 years, I mean, that was sort of before my time. I didn't live through that. But what I'm seeing here now is I was watching the PBS nighttime news show last night. Larry Summers comes on and he's going on, and it happened to be on in my house. It was like a kid show on before that. And so I just saw it on and sat down there and started listening to it. And he's going on and on about how this spending bill that's going through Washington right now is not going to cause inflation. I mean, he lies with, I mean, his allegiance, he's very left. He's in the liberal side, Democratic, but he's defending what's going through Washington right now and how it's not going to cause more inflation, which is just beyond my mind. I mean, then today I'm driving in and I hear a Republican senator on the news talking about how this is going to cause massive inflation. Well, we know what spending is going to do. We know what spending has done. It's going to cause massive inflation. My point in sort of getting to what you asked me is that everything is being politicized and allegiances are all over the board. I think right now the inflation is real. In Washington, the White House is looking to pin this on somebody. And Fed Chair Powell, who was lauded all last year for saving the world, saving the economy with how quick he moved in and started stimulus, he's going to go down as the sort of sacrificial lamb for the inflation that we're going to see next year. Mark my words.
Wow. Well, that's some big words, and I'm excited to hear who gets nominated over the course, let's hope in the next week, so we can figure this out and figure out how to trade around it. So, hey, Bill, I want to say, first of all, for those people that are listening in, if you like what Bill does, make sure you give a thumbs up to this video. You're giving a thumbs up to Bill saying, I like what Bill does. Make sure you subscribe to the channel because it's free to subscribe to our YouTube channel so you don't miss any of your content. But Bill, you also contribute every day to the Traders Summit site, and people can get your updated views where you don't have to wait for me to talk about crude, because you talk about it pretty much on a daily basis. So if I'm a trader, I'm trying to figure out how to trade commodities, I want to trade with you. How do I find out more about you?
Well, our site, bluelinefutures.com, you can sign up for a free trial of our research. It's 14 days. It's not just my content, but my partners as well. I do write the Morning Express that goes on your website, really every day. It covers the S&P, NASDAQ, gold, crude oil, silver as well. But my partners write great stuff. Like I was just talking about sugar and soft commodities. My partner, Philip Strebel, he does a trend following report on the soft markets as well as the FX markets. My other partner, Oliver Slope, does a tremendous amount of information with the grains going from corn, wheat, soybeans, livestock. So we have everything there. And then we all do videos on a daily basis. I talk about what's called the Midday Market Minute, covers, the levels that I was talking about earlier in the reports that I sent out that are on your site. My videos too sometimes go on your site as well. My partner, Philip Strebel, does a Metals Edge video. All of this stuff is you can see on our YouTube channel as well. So we have a ton of content out there. We'd love for you to visit us. And if you visit our YouTube, follow us, give us a follow too. We'd love for you to follow us.
All right, Bill. Well, thank you so much. It's always a pleasure to speak with you. It always brings a smile to my face, and I love your calls. So I'll be looking forward to talking to you maybe in a few weeks, catching you for what your views are going into 2022. Can you believe we're already at the end of this year?
What a year.
It's nuts. All right, Bill. Hey, thanks for joining us today.
Thank you very much for having me again.
My pleasure. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.